All right, guys. So just do a quick top-down analysis of what my week has been like and why I was looking to approach price the way I did, starting from the whole CPI story. Okay, because I think John had reached out to me. Is John here? All right then. So starting from the pre-CPI story, right, to the CPI itself, to every other thing that happened after CPI, and what else? And what happened yesterday? Yeah, I think, yeah, yesterday and today. So just go through that very quickly from my top-down analysis perspective to see what we had on price and then why I had engaged from the area I engaged from. So it's quite simple, okay? From the 4-hour time frame, it's obvious that Euro USD has been bearish, okay? And then we had this break of structure here on Euro USD, which also gave us a daily break of structure on the daily time frame, right? And then we had range structure all around this area. Okay, so everything happening inside of this area was just range structure. Please mute your mics apart from Austin, please. The rest of you mute your mics. All right, thank you. Only Austin, Perry or Austin, any of you. Austin said he's at work, so Perry can stay open. So you let me know when you're not hearing me when you're there. Okay, so all right. So all of these things were just range structures, but then it was important that we understood what was happening inside of the range structure. Okay, that would help us a better understanding of how we would look at price, because at this phase, it was one of the most confusing phases of Euro USD. I think week before last, a lot of us were trapped inside of here because price just kept engineering liquidity and grabbing liquidity, engineering liquidity, and all of that. Okay, so I will not go into details of all the stories that happened inside of here. I'll deal with that on a lower time frame perspective when I deal with how to trade ranges and consolidations. Okay, so I'll just go with the story that began from this point. So as soon as we had this market structure shift above this high on the 4-hour time frame, okay, this was a 1-hour leg. So we broke this 1-hour leg here, 1-hour shift of break of structure to the upside, and then price retraced back into. Now somebody was asking why price did not come into this place immediately. It's possible that price can do it in the nearest future, but price did not have a reason to come back into this zone because we are after discounts and premium prices. Okay, and then if I should measure up these areas from here to where we had this reversal. Okay, so this is my point, my swing low to this swing high. Okay, and this middle line is my 50%. So price has already come into the discount area. So anywhere inside the discount area is sensitive enough to cause price to push. Okay, so price taps into discount area from a hidden base on a breaker block rather on the lower time frame. I think it was clear on the 15 minutes, on the 5 minutes. I don't remember where I saw that anymore. I'll check it out. Okay, so price tapped into that, and then we had this push to the upside, now shifting 4-hour internal structure. Okay, now don't forget the 4-hour leg is still from here, right? This 4-hour swing high to this 4-hour swing low. Okay, but the internal structure got broken at this point. Okay, so every other person was expecting price to come into this area before we began to see sales. Okay, now when I teach supply and demand variations, okay, I think I still have a few other updates for you guys. So when I teach supply and demand variations, you understand that we have something called the decisive supply or demand, and then the origin supply or demand. Okay, so this was more like the decisive supply or demand. Why? Because it had met criteria for a swing point, and then it was also a flip zone. Okay, because at this area we had some sort of demand level that was supposed to push price to the upside but failed, right? So it means that inside of here there's supposed to be a decisive supply area, a flip zone that we could be looking to go short from, okay? And then for those of you guys who has watched through the videos or you understand my style of trading, I would always look forward to a grab of liquidity, right? At every high. Okay, so this was a fine grab on liquidity. So this high came in here. So this high came in here and then grabbed liquidity nicely for me. So I had a grab on liquidity on this high before a shift in structure. So it means this high was an actual swing point, was a swing high. It was a valid swing high to look for sells from, okay? So I just had to see an area that liquidity will be grabbed from this high before tapping into the area, which actually happened on the lower time frame. Okay, so that's the structural story on the 4-hour time frame. We'll go to the lower time frames. Let's see how price reacted to those areas that gave me reasons to want to sell from that area. So let's see the 15 minutes. All right. I think we can go lower. Let's do 3 minutes. So I don't have to keep skipping time frames and all of that. We'll just follow through. All right, good. So this is it on the 15 minutes. And then this is the liquidity that was grabbed on, what's it called? On the 1 hour area I just showed you now, right? So this line here extends to the liquidity that was grabbed. So the 15 minutes grab liquidity. In fact, let's go below, sorry. Let's go straight down to 1 minute. Let's go straight down to 1 minute. Is Jay here already? Because I think Jay was the one that brought this question to my DM, that he didn't see reasons why we had to sell from that point. All right, so let's deal with that now. Okay. This is how to actually see what price is doing. Try to know when to extend your screens and when to leave them plain. So what do we have here on that point? Now, don't forget, this is a line that grabbed liquidity. This is a liquidity area on the 1 hour, right? So this high came in here, grabbed liquidity and then dropped. Okay, and then continued higher to take liquidity from this high and all of that. So it means this was some sort of demand, right? Why was it a demand? Because it actually sponsored a move that shifted structure, right? Creating this grab on liquidity and then this, and also this high came up here, manipulating these two highs and then grabbing liquidity from this high. Now, after that, what happened? We broke this demand, which was my 1 minute shift of market structure to show me an intent that sign of bearishness, we were willing to go bearish. Okay, so after that, it means that I was supposed to begin to look for price to come back into these areas. Let me pinch that out a bit. Okay, I was supposed to begin to look for price to come back into this area and then sell. Now, after I saw this happen here, the moment I saw this happen here, I had already marked out some certain areas expecting price to come into this place already, but he refused because he had some extra confluences he had to meet and then play around this area a bit, grabbing liquidity, breaking structure. So internal movement, I would have sponsored the buyer purely visible here on the lower time frame as well, but I don't want to go into that on this video. Okay, so we have grab on liquidity, right? And then break of structure. The next thing should be what? ROTO, right? Now, for those of you who trade with me, you understand that I will always look out for the same confirmations on my ROTO. What's the confirmation? This high has to first be what? Manipulated. Okay, so we had this first move into the area that dropped and then price went up to what? Manipulated. By so doing, grabbing liquidity from this high. On the second time frame, you'll see it clearly. I don't want to go too low so I don't confuse you guys. So this top here is my actual point of interest from the ROTO. So this guy came here, reacted, dropped, and then grabbed liquidity from this high, also clearing the liquidity on this place that I had marked out. Now, this is where it gets interesting. This is what a grab on liquidity, right? And then this here is a break of structure. Okay, so in theory, after we had seen this, it means that this demand level was a nice demand. So price was supposed to come into here, tap this demand and what? Buy, right? Because that failed to happen. We only had this some sort of reactions at this point and then price fell. It means that we automatically have a demand failure at this block, right? And then I explained that demand failure transfers power to the supply that caused the failure, okay? Some people would have wanted to use this area, but then I was actually concerned about this mid because this guy had already tapped into this block already. Okay, this week had already mitigated this block already. The only unmitigated area was this fair value gaps here that led to this particular candle. Okay, do you understand that? So hence we are trading off a flip zone on the 1 minute time frame. Okay, so after I saw this liquidity grab here, I had the first entry that I took partials on quite early. Okay, before the CPI happened. Let me pinch that again. Where are we? Where are we? Where are we? Where are we? All right. Okay, so I was already in on these sales on Monday, right? CPI was on Tuesday. I was already in on these sales on Monday and down to this area because of the setup I had here that confirmed me to go in on these sales. And then I was only looking for a continuation. At this point, it meant we had this break of structure here. I was already waiting for a continuation back into this area before further sell-off. I don't know if I can share my Telegram screen. Let me see if I can do that. Okay. So let's get that very quick, very quick. All right. Okay. So this was the point here already. This was on Monday after I taken profit from the first setup I was on, and we had this shift in structure. I was already expecting price to give me this move on Monday, but then for some reason, price was keeping that move for CPI. Sorry, there's someone at my door. For some reason, price was keeping that move for CPI, so it could not mitigate that area properly on Monday. Okay, so we just had price do its thing and then continued aggressively to the. Sorry for the interruption. Okay, so let's get back on the charts. Which of the browsers was I using just now? Okay, so price got to this point and then failed to give us that push to the upside on Monday, but then extended it to Tuesday, playing around and giving us further stories. I'll just try to explain all the stories, like I said, all the entries I had from that period, okay, till CPI. Now, the reason for this buy, let me extend this a bit. Okay, so you can see that, okay. So at this point, I expected liquidity to be taken and then demand order flow to hold. Why? Because already we had a grab on liquidity here. Okay, we had grab on liquidity here already. And then we had this area. Can everybody see my screen? Are you guys still with me?
Yes, sir.
All right, so we had this area as a break of structure, right? And then so this was just an inducement leg that should be taken out like I expected. So I marked this area for a drawn liquidity. So when price got in here, I was already into the trade aggressively at this point, and then I had stop loss just below this region. Okay, so when this happened and price moved, I extended it to where we had reacted from, and then it just did its thing. The target area was for price to come back into this area. I had marked out this area for, because if you look at the chart properly, that's my last point of actual supply inside of the breakout structure. Okay, last point of supply inside of the breakout structure. This is the breakout structure. Last point of supply inside of the breakout structure. Okay, so it was a key area that price could react from. So I'd already taken partials on 5 hour and then the full volume run for 8 hour before we switched. So that was the reason why I took that trade. So let's continue with the follow through story. Okay. All right. So I think that was the only trade I had for that day, was it? Okay. There are two other sell setups, right? So we'll just explain that very quick, right? So now the moment we grab liquidity from this low, now don't forget this was the origin where I bought from before now, right? So the moment we grab liquidity, price continued, then there was an actual reason why I would have sold from here, but it was not comfortable enough for me. I wanted to see my setups play out quite nice because this high, okay, this high was a nice grab on liquidity here, but it failed to shift structure. So it meant demand order flow was still very much intact, right? So I was not interested in taking sellers from this high. So I just let that slide till I had a clear price action of what price was going to do. The same thing, if you look all through this way, I didn't take any trades here, okay, because price kept doing this thing. Now, after this area, I did not see a nice grab on liquidity, even if our last point of buy here was properly mitigated before price dropped. I wanted to see something clearer that I could relate to. Okay, hence we had this grab on liquidity and shift structure. I did not still come in here for some reason. I don't know why. I think probably I was not on the chart or something, but I did not come in here until I was sure that the demand order flow was taken out when we actually grabbed liquidity below this low and then we reached this low. So it means that we had cleared demand order flow, right? So automatically this becomes a failed demand. Failed demand transfers power to supply that caused the failure, right? So I just had to target the last point of liquidity, right? Internal liquidity. Some of you may be wondering why I'm addressing these stuff as liquidity. For those of you who are new, even the ones that are old, when I began to teach intraday mastery, AIT or LIT is the last course on your list. Probably we'll do that in November or in October. Okay, but I'm just trying to give you guys insights to how I see price on the lower time frame. Okay, so this is another failed demand, right? So failed demand transfers power to the supply that caused the failure. I don't need to mark that out again. You should be able to see it. This guy here and this guy here, right? That's if I was using the exact bodies of candles. If I was using the exact bodies of candles, this would have been a very nice sniper entry. But regardless, I was still very much intact. So price grab liquidity from this high, right? So came down, came back here to do its work because of the flip that have been created here. And then I was expecting price to clear all of these lows, but then as usual, I always take my partials at 5 hour and let the rest run. So at 5 hour, I was out on partials, and then this one just ran for 6.6 hour and then dropped. Okay, so what was the next trade? What was the next trade? What was the next trade? Yeah, good. So this was another grab on liquidity, right? I was expecting to come into this. I wanted to come in from this point, but then I wanted to see a shift in market structure first. Okay, when I did not see that shift in market structure, I had extra confluences to enter this trade on the 15 seconds. Okay, because of the grab of liquidity I have here, and then a lower shift in liquidity in this area. Okay, probably when I begin to deal with intraday mastery, I'll explain how I approach price on the 30 seconds and 15 seconds as well. Okay, so I got a 5 hour here as well. And then I was out on my partials on 5 hours. So price just came in, respected demand order flow. So it means this demand level was still very much vital. Okay, and then I believe you can see why this demand level was vital. Okay, you need to be able, for you to be, if you must trade the 1 minute time frame of trade ping pongs, you must be keen on details. You must be keen on details, right? This here is a grab on liquidity. I can use this week set for grab on liquidity, and then look at this as my intraday break of structure. Okay, this is my 30 seconds high violated, and then price just came back in to mitigate demand block and then continue to run. Okay, I was not interested in that again at the moment because I had already taken some pretty setups that were comfortable. And then I didn't want to do anything extra. Okay, if I needed some sort of confirmations, I still had confirmations in this area. Okay, when price shifted structure and then came back into this whole area is the demand block, right? So I'm just concerned about my last point of liquidity inside of the demand. Okay, I would have chosen to use my fair value gap as an entry. If you're new, please watch the videos on fair value gaps. I explained how to use them as well. So we had this break of structure, price return to fair value gap and move. So if I had taken that, this would have been my entry. This is where I would have entered from. Okay, and then this would have been to the next area of liquidity. I think a 1 to onto 18. Yeah, but I did not take that. So now the next point of target has to be external liquidity, because after grabbing internal liquidity, okay, the next point of target for price is external liquidity. I've explained that oftentimes. Okay. For the new guys, I'll try to do a session with you guys where I can just give you a rundown of everything I do, so it doesn't feel too alien for you, right? So the moment we saw this grab on liquidity here and then break of structure here, it tells us that price is giving us bullish intents already. So when price begins to give us internal bullish intents, the target is to take out external structure, right? So we came back here and then we took out these highs as external liquidity. Okay, I did not take all of this. I did not take all of this. It was a nice setup because already with the concept of internal structure and some entry models I used, they were plain reasons why I should have traded these areas, because this was my grab on liquidity, right? If I wanted to do intraday, and then I would have considered this minor low here as a shift in market structure. Why will I see this as a shift in market structure? Because this low here sponsored a move that broke higher, right? And shifted this structure to the upside. Okay, so it was valid enough to do its thing, but I did not take that for some reasons. I don't know. You can't always take all the moves that happens, even if that's what we are striving for. I believe it's possible to trade everything that happens on the chart if you want to. The most important thing is to understand the reason. Every candle has a purpose. Every candle has a target. Every candle has a direction. Okay, no candle is just there. With the whole confluence of price has tested 3 times. That's why it's selling. It's a stupid thing. Sorry to use that word, but then it's a very funny thing to say that the reason you're buying is because price has tested a particular place 3 times or tested a particular place 2 times. It doesn't make sense. It doesn't connote logic. Okay, it's not logical to think like that. Okay, so so at this area, we had a nice grab on liquidity, right? Tapping into the last point of buy and also trying to cover up for this imbalance that was created here. I believe you can see that. Okay, so you see every candle has a purpose. Every candle has a purpose. So this was an inducement high. Tapped into it, cleared liquidity from that, grabbed liquidity inside of this, what's it called? Inside of this fair value gap, right? And then we shifted structure here. 30-second structure actually shifted at that point. And then the actual 1 minute break of structure happened at this point. Okay, which gave us extra reasons to want to sell from this area if we wanted to sell. So this high or this high would have been my grab on liquidity, right? And then I would have had my what's it called, stop loss around 2.5 pips or 3 pips. Okay, 2.5 pips or 3 pips is what I usually use if I'm trading intraday setup. So let's call it 2 pips, right? Or probably 2.5 because of I would have wanted to cover up with this guy right here. So 2.5 pips. And then would have targeted first point to be cleared is this guy, right? Because this guy actually filled an FVG, right? So it becomes liquidity. After it does its work, it becomes liquidity. So I would have targeted this guy first and then to take out this low because it has already played its part as demand and sponsored a move to the upside that now gave us a new story. Okay, so I would have targeted this guy to be taken out and then pretty 5 arrows. So I would have taken 5 arrow at that point, as usual, 80% partials or 70% partials, and let the rest to run. Okay, so if we are going full volume on that, the next point of target would have been to clear out this low, right? But before you clear out this low, we have something called trade zones. Trade zones. Okay, so this is another area of what? This is another area of demand, right? That was yet to be mitigated. And then if you look, I still have a line marked out here for liquidity, okay, that I expected to be tapped into. So that would have been my next stop. That would have been my next stop. If I had a better position open, I would have taken extra partials at that point. Okay, and then watch everything run and all of that. See, we finally cleared this low, but then I would have extended to this point, right? So probably this trade would have just given me my 5 arrow or 8 arrow, whatever I would have taken off that, and just let the rest run. Okay, What was the next trade I took? What was the next trade I took? Okay, I think all this was later in the night. What was the time here? 17. Okay, this was already in the night, so that was why I was not active at this time. So let's see the other trades that came up. I'm just trying to run through everything I've done this week for those of you who see my chats and ask lots of questions. Okay, as to why I did this or why I did that. Oh, we've not still got into the CPI side. Okay. All right, so this is it. I remember this trade was in the evening. I actually saw this trade play out. I think a friend of mine got into the buys, but I was not interested. I was not interested in the buys at that time. Okay, so the morning began and then Frankfurt and London. Okay, I trade more of London sessions than any other session. Okay, so this was a grab on liquidity from this low, right? Tapping into this point of demand. Okay, so it showed me that demand order flow was still very much intact. Okay, and then we had price shift structure here on the 30 seconds because that's what I was looking at when I was trading this story. So we had a 30 seconds shift of structure, and then I was expecting price to tap into this region and come here to maybe tap into this and give us some sort of violation. But because price failed to tap into this high, it means that all of this area becomes inducement highs or liquidity that should be cleared, which gave me extra confidence to take this trade. So I had this area marked out for a sell as my last point of liquidity. Why did I use this area? Because I was considering this here as a grab on liquidity. Okay, so this week already grabbed liquidity. It means it has money inside of it. It could easily transfer to this guy. So I had my stop loss just below this week. Yeah, I think I extended it down a bit, 2.5 pips or 3 pips. Okay, 1.9 pip. All right, I think I had 2.5. I had 2.5 pips on this. I adjusted it after it had moved. Yeah, I adjusted it after it had moved. Okay, so price came in and then tapped into that nicely. Okay, and then continued. The idea was to clear out this high. So at this point, I think I took 5 arrow from this high. Let me see. Or before even that high, I had taken 5 arrow already. Let me calculate where that was. Yeah, before that, on this highs already, I taken my 5 arrow. So this one ran for a 7 arrow, but then I held its full volume. I just took 50% off at 5 arrow and then I let the rest run. I didn't take any other shorter entries inside of here. I just held this because I was not really enjoying the price action I was seeing here, even if I had other re-entries, because this was a nice grab on liquidity, right? And shift in market structure. This became the new inducement low to be liquidated. All right. You can decide to use that other guy in the middle if you want, and then your stop loss just below this new guy here. Okay. Running out of time, 10 minutes. Wow, I didn't know this would take this long. Okay, so price did its thing and then continued into this area. This should have been a 1 to 7. Okay, I'm just trying to mark this out so you see how I look at price. And then for CPI, okay, so don't forget we had a story on the left, right? Don't forget it was the very important part of the whole thing. Okay, because this was a flip zone, right? Grab on liquidity of this low, broke structure, so failed to buy from this point, it broke it. So the supply that sponsored that failure becomes the flip zone, okay? So it was nothing too extra. It was nothing extra magical. Okay, so we even had extra confirmations how I would have entered there in case you didn't have a pending order. So that's what I'll be explaining now. And we'll move from there. Okay, so price grab liquidity, broke this, came into here, right? So this was some sort of demand area. Okay, demand area that failed and transferred power to this supply. Okay, so let's see where that happened. It'll be more clearer if you looked at it from an intraday perspective. Okay, so at this point, it was quite quick though. Demand failed, broke, but this week came back to retest this and drop. Gave us more confidence here when we had this small break of structure This was a 15 seconds break or a 30 seconds break. Okay, after the break and too many rally, price came back to a root TO, right? So it says this point of interest. Okay, for those of them who could not get in at that point, we had this break of structure, right? And after this break of structure, price came back in to retest this area. So you would have had your entries on the open of this fair value gap, right? So inside of this area. And then if you had primed this very properly, it was still possible to have get in, even if that happened quite fast. Okay, so there are still multiple entries at this point, but I was holding in already from this point, right? My midline exactly of that point, and then this ran, I think about a 1 to 60 something thereabouts. But I closed on the 1 to 50 and I let the rest play out. Okay, so that was how I leveraged off the CPI. Let's see post CPI now. Let's see post CPI. Okay. Now, I know I sent this to the group. Did I send this to the group? Okay. So this buys, there was a flip zone. There was a flip zone, some point of what's it called? Some point of demand to the left. I remember very well. I don't want to extend that so I don't take too much time. So this was supposed to grab liquidity. All right, let me mark that out. This was supposed to grab liquidity and then broke structure to the upside. So price was supposed to come back into this area and then buy, right? But that did not happen. That failed to happen. So this zone was failed, right? So this automatically became a failed level of demand. Hence, transferring power to the supply that did the failure. But this was the supply that did the failure. And as soon as price broke this, as soon as price failed the demand, it came back immediately to mitigate the supply before it dropped. Okay, so it means I was no longer interested in this point. I was now looking at this area of fair value gap that was yet to be filled. Right? And as well, this was the last point of institutional buys before this sell moved the drop to the downside. And then if this has not been mitigated, it means that this buy order here is still in a loss. They had to close or break even. The big banks and the composite man, whatever you choose to call it, had to break even on this buy position, right? Okay, so hence they came back to this point. Why did I take a buy at this point? I had this grab on liquidity, break of structure, okay, and then I was looking forward. Now, if you see the size of my stop loss here was bigger, okay, because all of these zones look quite sensitive to me, and then I did not want to get left out on this price. So the first liquidity grab I saw, took my entry and then had my stop loss engulf this last indecisional candle that was also a potential block to sponsor price. Okay, in the real sense, the whole of this candle, the whole of this down candle is the order block. In the real sense, the whole of this down candle is the order block. So I didn't want to miss out on that. This was just a 1 to 3. Okay, it was nothing too extra. All right, so price came in, tapped that in nicely, and then I needed a confirmation for me to come in here for a sell. Okay, so I had to see my structural shift. I was not comfortable with all of these movements till I had this move to the downside. Okay, till I had this move to the downside, grabbing liquidity from this low and then coming back into this area. So I entered this aggressively and then just put my stop loss above this. That's why you can see it's still 4 pips. All right, I entered this aggressively. Now, it's possible I would have still taken buys from here because this was a nice grab on liquidity break of structure. So overall, I would have still been with the buy move here and then just do this. Okay, but then it was not making sense to me because it was still less than a 1 to 5, 1 to 2. And I do not take setups that are less than that. I had already done that here with the 1 to 3, which was not pretty exciting for me. So I rather just came in here with the sellers, right? And then I jumped in here and then I've taken partials on my 5-hour rows usual. I'm sorry I'm boring you guys with this story, but then I think I just hope you're learning a thing or two from how I approach price. So at this point, I had taken my 5-hour room, yeah? Okay, and then I had a re-entry here when price shifted this week. If you look below, it grabbed liquidity from this week, right? That was my shift of structure and then came back here to mitigate this stop, right? And then dropped. So this was another 1 to 5. This was another 1 to 5, and then this was also another 1 to 5. Very, very, very funny stuff anyway. Okay, because if I take this out, okay, I want to use this to explain something at the far left, so I will not totally take it out. Okay, if I take this out, you'll see a grab on liquidity. Let me stretch this screen a bit. Okay, we have this grab on liquidity with this high, right? And then a break of structure. Okay, this is my structural shift of this low, right? Perry, are you still with me? Perry, are you still?
Yes, boss, I'm with you.
Okay. I hope you guys are not lost. Okay, so
No, sir.
okay, so price grabbed liquidity and then shifted the structure. Okay, and then came back up to take our liquidity from this high, which was my confirmation. And then if I need extra confidence for an entry, we had this lower time frame, 30 seconds break of structure here, and then price retreats back into the area, right? So tap this guy and then sold. Okay, but I'd already come in here for the sales at this point, and then we dropped. Okay, so let me delete this so I don't have too many markings on my screen. Okay, so what else? Why had I taken this? Okay, this was a grab on liquidity, right? And I was expecting this structure to be broken. So as soon as this structure was broken, you will see I have a more, okay, see 2.4 pips. Now I did not take it above this high for some reasons, because this week already grabbed liquidity from here, and then I think that was enough area for me to extend my stop loss to. I would have used a single candle, but then I was not confident with this price action here. So in case price wanted to wick into this, so I think this went for, let me see, how many arrow? Yeah, because I taken at 5. I had taken my partials at 5. Yeah, this was 6 arrow total before it reversed and took out the other position on break even. Yeah. So what else? Okay. I was not doing anything here. I was waiting for good. So this was a grab on liquidity, and then this was a break of structure. I was waiting for price to come in here and then give me. Now there was something like 30 seconds I marked out as liquidity here. That's why it's not visible here. My liquidity area was actually marked, I think, for the 30 seconds on the 15 seconds. So as soon as price grabs that liquidity, I was willing to risk. It was barely 2.8 pips. Okay, so I just got in. Now this was a confirmation entry once we have this low field, right? So this high grab liquidity. Okay, so grab this high grab liquidity above here, right? Tapping into this FVG and then shifting structure, right? So we came back there to tap into this and then dropped. So this was I think overall run for how many arrow? But as usual, I take partials on 10 arrow. The same thing happened on 5 arrow rather. Same thing happened here, and then this. So this was a failed demand zone. Demand failure transfers power to supply.